Welcome back to my YouTube channel. As you know, is your boy Gates on K. Today I want to give you a breakdown again on gold, what I was looking at and what ended up happening. Also, I just want to say thanks to everyone who's subscribed in this channel. With your support, this is where we hit 1K. So without you guys, I wouldn't be here. And this is why I'm making sure that I have to provide the information in the simplest way that anyone can understand it. I know few people, they still have some problem here and there, but believe me, anyone if you don't have the capacity of learning by yourself, you need just to find a mentor. A mentor is a person who's gonna try to help you to understand where you don't get it right. So inside gold, I'm gonna try to give you my big picture of what I'm looking at. Then I'll give you the breakdown of what happened today. I'm not just gonna go more in details. This one is just gonna be a quick video. I'm trying my best to make it 30 minutes because I see it pointless for me to make a video of 1 hour while people, they're only watching maybe, let's say 10 minutes, 6 minutes. You see, yes, I know a lot of people, they are busy downloading the video. That is also good, because the more you download, you don't have every time back to come and use the internet to rewatch it. For those one, they want to learn, and there is also those one that don't download. And also, please, I beg you guys that are watching the video without subscriber, please make sure you do give me a subscriber, guys. So we want to see this channel growing. I'll make sure to provide more information. I have a good plan again for 2022. Just going forward, you guys gonna see what I'll try to bring on the channel. I just don't only continue, I don't want to continue only giving you guys what you call chart breakdown and other stuff. I want to try to bring also new stuff that you guys wake up and look and say, okay, this is good, let me do this and that. You see, those kind of stuff. So another thing is that, remember, I'm not a financial advisor. Anything that I'm showing you guys right now and in my channel is based on my experience and from what I learn. I always tell you guys where I learn and what I'm applying. I'm not the type of guy who can wake up in the morning and tell you, no, this is the one I created. No, I don't create anything. Everything was there. I don't create candlestick, they're there, but I'm just showing you guys my brain and my way of understanding the market. So please, if you want to use this information, use it at your own risk, and you know that where money is involved, there always be fire. So be ready to face everything that is going to happen. So the first things that I'm looking at gold, like in my big picture, I'm looking at gold to come this area. That is what I'm looking, because I'm looking it in terms of supply and demand on the higher time frame, because I know this area is going to hold the price. Why is going to hold the price? Because I had the break of structure here, then I have liquidity. All this is liquidity. You see, all this is liquidity. You can call it fake out, whatever. And market is still playing. So I've been waiting for this level for so long. And you know, gold, sometimes it does what it is doing and make it happen. You can buy, you can sell anytime it want. But the only thing that you need also to understand is just that since we have been trading in 2020 up until now, we're still trading inside this range. This is how we are trading in weekly time frame. Then if you go to daily time frame, then you're gonna see there is also another range that market did create. Because if we're gonna mark that is the high, but this is the daily time frame, you're gonna see we have all this. So gold was being stuck. If you can check, gold was being stuck around this area. So let me mark the top and the downside. So gold was being stuck there up and this down. This is where gold is stuck so far. So we're gonna get the clear direction is when one of the two market break it. Because when we talk about the range, this is what we understand, that after we break this one went to the upside, fell to break the high. It come again down, it fell to break the low. So where do we stuck? We stuck inside this range. anything is happening here, but as long as we haven't take this high or take the downside, this is what you need to understand in terms of higher time frame. And what I'm expecting is for market to come and run all this liquidity and trade to the downside. Then if we go to the upside, the only level that I'm gonna look at is gonna be this area, because it's an area where we have our supply. But remember also, gold also is gonna try to break the higher, like the way Nasdaq is doing and other stuff. So since we understand this one, the only thing that you need to know now is to play with the market. What is the market doing? We can also, let's say, mark all this area the way market was going. So, but I'm not here just to show you guys all this story, maybe try and complicate you guys, but I'm gonna try to make it as simple as it can be. The only thing that I'm trying to make it simple for you guys is gonna be this one. If you can check here on the previous video on the channel, I did mark this area as the big liquidity where gold has to trade above. Then this was the zone that we sold. I think so many people that I know, they sold gold from this area to come to the downside. Then gold come to the downside. When we check in terms of structure, if you want to try to understand, like first liquidity in terms of supply and demand or whatever, what we're gonna say, all this area was what we call a fake out zone, FLZ, because we had all this touch. Let me mark for you guys all this touch. So we have resistance 1, number 2, number 3, then here they break. So what you're gonna see from this area is just that this zone, it's what we call a demand area. For people that they are trading, let's say break and retest, then plus the continuation stuff. Let's say something like this, market gets the level. Even us in supply and demand, we're gonna say this is a swipe zone. And then at the end of the day, market comes somewhere here, then market break the zone, respect the area. What do we wait next? We are waiting for market to come at the swipe zone where there is any significant level. Let's say, let me mark something, then market has to buy. So this zone is gonna be our zone where we're gonna look to say what, okay, we need to buy, because there is a decision point, a strong decision point, and people that they're trading, let's say SNR, they'll say, okay, this become a support, break and retest, so let us buy. Most of the people, they expected to buy here. There was more liquidity that was resting here. Then check what happened after market fake out this area. Then markets come in this zone and give a clean break. So market come here and give you guys a clean break. So when they give a clean break, now what they did was, because here there was a demand that was resting here and never mitigated, they just can mitigate that demand. Then they make sure they come back again to this area for them to do what? To sell. So this is how you need to understand. Then we need to mark. Let's say we talk about structure. What do you see about structure? The only thing that I saw about structure was, okay, there was this, you see, all this level. Let me just mark like this. Let me delete a bit of story so that we can have a clear stuff. Okay, in terms of structure, we have that high. If you check here, market break the low, then we print this one, and there we have all this story. Then market come and give the low, then check this one, it's higher compared to the other one, the previous one, because the body closed above. Then market come down, and here we have another zone. So what do you see now? When market was coming to the downside, here also we had another structure of how market was going to the upside. But here what I'm looking at, I'm just looking about this demand area. So if we mark the structure also, this one can be H4. If you go to H4, then you are going to see, but I like the daily because daily give me a strong demand that, okay, market is gonna come back to this one. I'm sorry guys if I'm super slow, but remember it's January. This is the 3rd January, so we are trying to be in the good mood again. So if we can mark, we know that, okay, this area was never been mitigated, because all this, you see, in terms of if you follow your structure, then this one grab liquidity here, Then this one was the one that break up and push to the upside. So this is what you need to follow. At the end of the day, all this was just liquidity for them to do it, to come and buy from here. Like people that they put, let's say, trend line, where they'll say, okay, we buy here, they buy again here, they buy again here. Next minute, market come and fake out again. But this is a strong level of demand because it is a strong level in daily time frame. This is what I was looking at the market previously. You guys can check my video. You know what I'm talking about. So when market is going to the upside, as a trader, what is that I'm looking at? The only thing that I need to understand is find out where is all the manipulation. Where did the market manipulate? That is the only thing that I need to see. Market doesn't just sell or buy because it feels like buying. They follow where there was a manipulation, where there was all those stuff. Remember here, if they wanted to buy, they were gonna make sure to send everyone on the wrong side. They also put their money at this area because it's a strong demand. This area is hidden base, a strong demand. We waited for market to come back from here so that we can do it. We can buy. That is what we waited. Then check this eye. It tried to return back to that zone, but it fell. Do you see this eye? It created an FTR because it tried to come back this area, but it fell. So this zone was still fresh. If we take this line, we keep it up until this side, where there is our hidden base. Hidden base is just there. What do you see? This is where there was a manipulation. If we go, let's say we go to the low time frame, I'm gonna show you guys what happened there. You're gonna see it's a clean zone, clean area, where people they waited. You see, we had a strong momentum. This is what people they've been waiting. Even me myself, I hit a stop loss here because this is what I was waiting. What I tell myself was, okay, this is where I had a strong bullish momentum. It started from here, then market break this zone, market create all this liquidity. Everything was there for me to do it, for me to sell. I even show people on the group. If you go back to the group, the public group, you see there is a chart I send that I'm expecting gold to come and buy from here. But check what happened. It was a clean break. They kick me out. Then, if we go, because this is on daily, if we go now to the lot, to let's say to higher time frame, this is what we're gonna understand that, okay, on the higher time frame, there is another story. There was a manipulation that happened on this one. Then how do we sell? Do we take the entry straight from there? This is what I'm gonna try to explain is risk entry and reduced risk entry. How do you take the entry? How do you see the market the way it's playing? Then when market gets here, this is today, and if you want, people that they trade, let's say, trend line, whatever, 3D, you know, all those kind of stories. This is what we're gonna tell your story. It's okay, but as long as you see there is a liquidity, this is a manipulation zone, and check the momentum from all this break, the way market was delaying to go to this area. That is also another confirmation of you doing what, taking an entry. You guys know, since I found this area on daily time frame, what am I gonna do? I'm just gonna go straight to H1. I don't even need another time frame. I don't even need another time frame for me to be able to do it. To look, let's say, H4 and whatever. Then when I'm in daily time frame, what I see is that, okay, this is the zone. This is where we are the hidden base. If I want to risk, let's say you want to risk, and my stop loss always be 10 pips. I can say, okay, this area, I can put my stop loss maybe somewhere here, 10 pips. So my stop loss is going to be just here. Sometimes I do use 15 and 10 pips. So, okay, in this case, I'm going to say, okay, 10 pips because no momentum going to the upside, market was delaying. And the only thing that I need to check right now is what happened when market was going to the upside. I need to mark again structure and try to understand. I can say, okay, market took out this low and break this one because this one was the one that produced this low, lower low. Then we break again to the upside, we come down, we break again, we come down again, and market create again this area on top. After we break this high, what am I waiting for? I'm waiting for a retracement. Then I need to understand where is the retracement going to be. This is the I. And from all this retracement, what am I gonna look for is, I wanna see all the decision. This is a demand area. This for me, it's a liquidity. So market has to run this one. And what is the level that, like in the morning, the level that I was looking at was this area. This is what I was looking, my zone on this one. Like I was looking, I didn't even look at it because here there was a block on H4. I just doubt market could come and respect this area. So what I was waiting for, I need to see how market is gonna come here or here. This is what I'm gonna wait. But at the same time, for people that they trade, let's say we trade SNR and SSR, this is the same logic of what happened in daily time frame. And another thing, what you need to see is when market was coming to the downside, this was a correction for them to do what? To buy the ABC pattern. You see, they are selling to buy. They are selling already to buy. And when you are buying from here, because here if you go to, I think it was on H4, you're going to see there was a decision point there. You see, a decision point was here for them to do what? To get a buy position to go. Same story. Liquidity, we break structure. There is a liquidity. We come back to go to the upside. How do you sell? How do you know that, okay, my zone is going to hold my price? This is something that you need to keep attention to. The only thing I teach you guys so many times, we have this first movement to the upside. We have the second movement. Then we have a reset. A reset is the consolidation and whatever. If you put people that they trade flags, they'll tell you this is a correction. If you guys don't know, this is a correction. They corrected here, they push again more to the upside. How many of them do you count? How many of them? I have already 3 of them. What I'm waiting now is to see if market is gonna give me a retracement. Since I have this on, I need now to understand the structure on the low time frame because this is H1. So I need to go now on the low time frame. Instead, I'm gonna look at M15. If M15 is not clear for me, then what I'm gonna do, I have to look at M5. So let me write for you guys here. This is what we call the risk entry. Guys, I'm just teaching slow so that you guys understand. Because it's so hard, you teach slow and you explain to people, next minute you get a question on the same topic that you explain. So this is why I'm trying my best. I'm not rushing, I'm not going anywhere. I'm just here to show you guys what you're supposed to do. That one is the one we call a risk entry because it is on a daily hidden base ignore. At the same time, there is a what we call SSR line, because there was an SSR line there where support resistance meet each other there. So this is the area that is a reduced risk entry, but the only thing right now that we are looking is what we call a reduced risk entry. So this is the first one. Let me show you guys. This entry, this touch, the first touch here, this is what we call, why am I drawing like this? So let me just do from the up to the downside. Oh, what happened? Okay, so this one must be like this. And this one, I have to delete it. So this is the reduced risk entry. Now, one thing that we want to mark is to see how market is following and going to our decision point to see if there was a break of structure. How do you take the entry? I did explain to you guys so many times on my channel, on all my video. If I have a demand, let's say supplier level in this case, what am I gonna see is the way market is going. I don't even need to go more to the downside and try to understand structure more. The only thing that I wanna see is how is the market going to my decision point. If market get like that, the only thing that I want to see is if I want to take, let's say, a sell position, I want to see if market can break this last higher low that give me the higher high. And this, for this higher low to be valid, it has to take out the previous higher high. Then market has to give me this change of character, like showing me, okay, I break structure, now I want to sell. Then what I'm gonna do is to see if market can create a liquidity or respect my QML, or just go back. Maybe let's say we have a footprint or whatever that is gonna be here, a rejection, for me to be able to do it, to catch my sell position, then go to the downside. And the next trade that I'm gonna look is gonna be, because I know after I get this area, the next trade that is gonna be, it's either they're going to use this low or this low for them to do what, to continue. But it's gonna depend on where there is liquidity. This is what I'm gonna look. And this is what we see here. If we check here, we break this one, we grab liquidity. And here also we break structure. We create an inducement. We create an inducement. Oh la la, sorry guys. We create an inducement, and which one is going to be our zone? This is going to be our zone. When we take this entry, this is what is going to be a reduced risk entry, because it's showing us that market is changing direction already. Okay, this is what happened here so far on M15. I'm just gonna mark something like this. Then after we break this area, we break the area, the only level that tried to return back was that one. Then we go. So for this one to be clear, I have to go to M5, because there I see market is like trying to play a trick on me. So this is gonna be the M5. Let us mark. Okay, we break this area, and this one try, because it take up this liquidity, as you can check. So this is the one we're gonna mark. And then from there we are going to mark again this one, and this one trade inside. So the only thing that you need to understand right now here is, okay, we have our decision point. This is our decision point, the daily, and this is the hidden base on daily that has been ignored. Then market get here and react to the zone next minute, because let's say here, if you don't have a patient already from here, your heart is gonna start beating and tell yourself, market is not gonna drop, let me just close this trade. Then you close the trade, next minute market drop. This is why sometimes you need to keep your patient. You don't have to rush anything, and check it. Market gets here, grab liquidity, then market break structure. So when market breaks structure, what do you look now? You wanna look for a decision point that is going to hold the price. I know most of the people, let's say the one that they trade ICT style and this other stuff, they trade block. Me, sometimes I don't use block, because I want to see where there's a manipulation. Already people that they trade block here, they're gonna, let me just say you, in case, people that they trade block, this is gonna be their entry. And if they wanna reduce the stop loss, I'm not saying other block is wrong. Let's say they want to reduce their stop loss already after market drop like this, they put already maybe at the break even. Or sometimes people, they say, me, I'm going to use only 5 pips. After 5 pips, I don't look at the market anymore. But me, sometimes I say, I'm going to use 10 to 15 pips. Me, I'm going to be in this trade, because this is why. I don't want to try to impress anyone. I'm just showing like what I need to do. Then when you see such movement, let me cut from here. When you see such movement, what do you see now? So this is what you look at, and you say, okay, based on the hidden base, this is my experience. Okay, I'm taking the entry here, and you put already your stop loss there. Then next minute when trade drop, there is even other people, they will put already the trade at the break even. This is why the advice, and my advice also to you guys, is you update your entry, your stop loss at the break even only when market take out this low. This is when you update your stop loss at the break even, because sometimes when you rush to put your stop loss, then you're gonna see market is just gonna come back and kick you out, then go in your direction. So when I see such things happen, for me, I wanna see if there will be a rejection. This is the only time frame I'm using. I don't use M1, I just used this. I can go to my M3 and try to understand. Okay, I see on M3 I have this rejection. So let me see on that rejection what happened. This rejection is the one I call the footprint. So if you check here, we have this zone here, that is the zone where market this one supposed to get back and sell, but did not get there. It manipulated the area. Then what I'm gonna wait right now is my first entry is going to be at this area, and I'm gonna put only 10 pips. Let's say, what is 10 pips? 10 pips is gonna be there. This is where it's gonna be my stop loss at 10 pips, and I'll target the low. That is my first entry as I normally trade, because I don't trade multiple entries. Sometimes I do those crazy stuff, but I do respect my money. I'm gonna put another entry with again 10 pips, because it's better to be safe than sorry. This is what I'll do. Why I'm doing all these two entry? Because the first one I want to take it at the 50. Sorry, the first one I want to take it at the open of the footprint, and the second one it has to be at the 50%. And if you check this one, this area did not touch this candlestick here. Did not touch my footprint. You see, even where the market open, all this candlestick is what we call the rejection block. If you learn ICT, it call it the rejection block. But for me, I look more in the wick, because I see in the wick there is more liquidity than this side. And this is why people will say, even us we trades SND, what we're gonna say, okay, we have the hidden base here, this is my entry. But if I put a big stop loss, it doesn't matter. You see, it's gonna be okay for me. Then let's see what happened. You see, the first entry is in already. Now here, what I'm gonna do, I'm just watching what market is gonna do. And the second entry also, it's in this one. So the only thing that I need to understand right now is, where is it going to be my TP, my face TP? Remember, if we look this low here, manipulate the eye, take out liquidity, then it creates this eye. So this eye, is the eye that was being produced from the manipulation. And this eye, what happened for it? Because here there was more people that they expected market to come. Let's say we are following order flow to do what? To buy and go to the upside. Then markets come and break structure. So when market is going to the upside, we know, okay, I have this on. If market fail to break again this eye, because we have already the break of structure, the reaction is we want to see market come back here, so what we can do is we can take our entry. Then if I'm taking the entry here, what is going to be my target? In terms of the low time frame, this is going to be my target. Then I'm going to look on the M15 and the H1. What is the liquidity? What is market going to target? I've already shown you guys the structure on H1 where there is a possibility of market to go there. But when market break this area, I'm going to make sure maybe I take out 30%. Or what I'm going to do, I'm just going to look, okay, if I can lock a certain profit and try to see if market is going to continue going to the downside. Then this is what end up happening. Okay, see, market did what? Market break. So when markets break this zone, I can say, okay, I collect my first profit, then all my entry, I just put all my stop loss at my break even. Then I'm running a risk-free trade. Here, no psychology, no me fighting with my psychology. Then I can go to the higher time frame and try to see on the higher time frame what is going to happen. So the first things that I want to see is that, do you see this area? I explained to you guys. Do you see this area? What happened? This area, markets manipulated this low. They break and they push to the upside. Then we expected market to come here, as long as we have a QML stuff, you know, we have the low, the high, lower low, whatever. This one fell, but it's supposed to be a proper QML, but it fell. And if you check this zone here, what do you wait next? We wanted market, since market manipulated this area, then we want market to come back and react from here, maybe to buy. This is what we trade on SNR or SND, whatever. But we do check that this area also market manipulates. But what is the next zone? We have this low here. This is the area where if I wanna sell again, I want to see market come and trade here. But the only thing that I see is this area, it's aligned with this strong support. So this is gonna be my area where I'm gonna do what? I'm gonna look for me to do what? To sell again. I'm gonna look, let's say, for something like this. This is gonna be, in case market is gonna come back here, let me just put 15 pips. Or what? Yeah, 15 pips is enough. So this is gonna be the first entry, and I'm gonna target all this low here. I'm gonna target up until this area. This is gonna be the first reason of me doing all this stuff. And my second entry also is gonna be here on this line. So I'm gonna put another entry there and say, you know what, I'm gonna put, let's say, 10 pips. Okay, 10 pips there. And then I target the low. So this is what I'm gonna look at the market for now. I have this zone, because if you check also this zone, it has this strong resistance, strong support here. We have this strong support, and we have a resistance that was here. So I'm also gonna look at this area to see what is going to happen. And then let's see what happened. Okay, market is pushing. Then I'm gonna look also on the time, the Asian range stuff. Okay, it's okay. Okay, so let's see. Now this one, it's even making my zone become more valid. But this one here, do you see the manipulation that's happening here? Do you see this block? We have a drop, base, drop. Then market create this zone. Because I have this strong support, plus I have this resistance. You see resistance, support, then we try to create another resistance, then we break. So we create a base already here. So this one become the SSR as a strong support and the resistance. And then what we're gonna wait is to see how market is creating liquidity. So far, market is respecting this trend line. Oh la la, guys, I don't know what I'm doing. What is happening? So far, market is creating this, and let's check again here. Okay, let's see. So anyway, I have the first zone that I'm gonna look for sell. Is this the first zone? And the second zone is gonna be the one on top. So let's see. Okay, yeah, I hope I'm in. Yeah, it's missed by small pips. Let me check. Maybe my line, I put it on the wrong side. Let me see. Okay, let's see. It's supposed to be straight. Yeah, so if it was straight there, I'm supposed to be in from this area. Anyway, so the idea, as you get, all of you guys get it. So this one supposed to be my entry. Let's see. So since I missed the entry there, but I'm gonna take an entry here. On the previous video, I did show you guys that there is this engulfing candlestick. I'm gonna look when we have engulfing like this. So market has to come back and trade at the 50%. I'm gonna make sure, guys, I give you a video on this one. So this one can be my entry, because this is my confirmation of saying market is gonna sell. Then for this one, let me put again my 10 pips as I always do it, because according to me, this one react there, then I have this engulfing candlestick, and then market has to return back and trade at least to the 50% for me to be able to catch the movement. And this is what ended up happening. You see, guys, how market drops so crazy. But this is the area that we are looking at for us to do what? To come and take a buy position. And this area, so many people, they waited for it because there was a block on H4. There was a block on H4. You see this zone here, all this area. So the first block was this one, where people will say, okay, market is gonna do us. Market is gonna sell. But check what happened. They manipulate this zone, then they trade above it. Can you see what happened? They come back, test the zone already, because they trap more people with sell, with buy. Then they come back and collect their orders. They lie to people that they are buying. They buy from here, and people they put buy. Then they break, they come collect their orders and continue again. You see what happened there. So right now, we are now playing inside this zone. And this is where we are playing right now. Just by applying what I'm showing you, just by applying the concept that I'm from showing you, you're gonna be able to catch the movement without even stress. This is almost like plus 300 pips. If you could catch the entry, let's say from night time when markets open, you see 330 pips just for today only. So you just need to know which strategy you're using. You don't have to come and apply so many stories in the chart. All you need is the simplest strategy ever. Even myself, I was using so many stuff. But if you see these days, I don't even do all this stuff. Let me show you guys that what I'm talking is what I was looking at in the morning. Let me go to, okay, this was...
guys, knowing too much sometimes is good when, and is bad, is good and is bad. Let me show you something, guys.
When market was crashing, as you can check, guys.
Do you guys see this?
You see? When market was crashing and all this other stuff, I was in front of my computer. I could be able to catch all this story. So let me show you now on my get charts. You see, I'm not making up a story. This is the things that I was looking at, because after I saw market break structure, market's supposed to do what? To come to the downside, and this was a momentum line. Because most of retire, I put this one because I was trying to see where there is more liquidity. You know what happened? People, they expect market to come and touch here and go. They says first touch, second touch, and this is the third number 3. Sorry for them to do what? To continue and buying again. So I hope the video is going to make sense to you guys. But if you want to try to understand about more, let's say in terms of let me put my Asian range. In terms of Asian range stuff, this is the Asian range, and people I know, they ask me, what is your Asian range? Okay, my Asian range starts from, let's say if you're using New York time, this is 6 p.m. to 1 a.m. This is my normal one, and there is people also that they put, let's say 9, something like that. But me, this is my Asian range. This is what I use. So what do you wait for? If you want to catch the movement, people, they'll do something like this. They'll say, okay, we have this area. Then let us look for the edge midline. Then check what happened. This is Frankfurt open, market drop. And come fill all these orders that was resting here. Then they start doing what? They start buying. Then for me, what I'm gonna wait for is for market to show me direction again. I see I have this buying pressure, the one that was resting here. If I go again to low time frame, you're gonna see there why we could catch the movement. If we go to the low time frame, then we can even reduce it properly to this week, because this is where we get the most of pressure on the buy side. Then we are buying on London. Almost 3:30, we are buying here. But where do we take our profit? This is one thing that we need to understand. Okay, as we can check, I think I did explain to you guys already, all this area was just liquidity, momentum, touch. Do you know how many liquidity was resting above here? This is why you see market return back, but if you check here, you're gonna see it's aligned with this area. This is now we are checking time and price. So what we can do, this is we are checking time and price. And for people that they don't know about that, they'll say this is their order block, and they'll do something like this. This is what they'll sell. This also is another way of making it simple. This is what I like about Michael, because Michael doesn't want to give you stress about you looking at this candlestick. Yes. So if you want to look at this candlestick, you're going to do like this. This is your candlestick, and this is why you have to look for the entry. Like according to us, we trade supply and demand. This is why we have to look for our entry. Then Michael is going to tell you, no, this is the order block, the last buy before they sell. So this is why you're going to look. He doesn't want to give you the reason of why. And this is why sometimes Michael tell you, you need to focus on the 50%. So the reason of 50% is because on the left side, there will always be a manipulation near the 50%. This is why it told you to do so. Then market get here. You could sell from here. And what time was it? Already, this is London, almost London kill zone to the end of it. And this one could be your perfect entry. I explained to you guys how you could catch this perfect movement for you to be able to come to the downside. And this one, another manipulation. What happened here? And people, what they'll say is that, okay, here we have shifts in a market structure. We break structure without looking at the momentum of where price is going. This is what people will do. And here they'll come and put a pending order. Then they'll say, I'm trading block. Now they started even saying the block is not working. It's not the block that is not working. It's your mindset that is confusing you. And they'll try to do, oh, now we need to target the Asian eye. Man, just understand what is happening in the market and what is going on. Nothing is 100%. But the only thing that you need to do is by applying the logic, try to understand what is happening in the market and check what happened. Then we have the New York Open. New York Open somewhere here, 7. How do you cut the entry? I saw here on New York Open, there was something that was clean. So on New York Open, what you're gonna say is, okay, market did break this low and it creates all this liquidity. And then we have this zone, what do you call? The Mera from Mansori, Mera. You could catch a movement here. Again, we break again the low. Then market return back to trade here, almost 8. This is 8 when gold just become crazy. Do you see what happened on the 8? Market just drop until I'm sure it was 8:30. This side, when they trap people on that H4 block, if you put a line somewhere here, then you understand this was the H4 block. Let me show you guys. This was the H4 block where they trap more people. So I know that story. This was the area where they trap more people. And if we go to the low time frame again, you're gonna see what happened. Do you see what happened on this zone? When they manipulate the zone, they come back to it and test, then drop. This is what is happening. So simple and straightforward. So guys, I hope this video is going to make sense to you, and enjoy the video. Make sure you apply the concept, make sure you back test. Only the one that remain up to the end are the people that understand what I always talk to the end. So sharp guys, enjoy.